Hi there, my name's Gordon Farragher. I've been teaching tax and law for many, many years. And this question is one I've been asked many times. Do students pay tax? And that's what I'd like to look at here. Well, the first thing to say is that there are no special rules for students, there are no special exemptions, so on the face of it, yes, they do. There is a popular misconception going around student unions that students get some sort of exemption. That is absolute garbage. They don't. So what we need to do is we need to think about what sort of income a student might have and what taxes might be relevant. So the first tax that we will inevitably think about is income tax. Now, income tax is relevant where you have an employment. You earn a salary or a wage, or basically anything from a job. Doesn't matter what you call it. Even tips are included within this. They are subject to income tax. If you have a little sideline that you run as a business on your own account, the profits from that business are subject to income tax. If you own a property that you rent out and you collect rent, that rent is subject to income tax. If you've got any money in the bank and they're paying you interest, that interest, you guessed it, income tax. And if you happen to own any shares and the company declares dividends, then those dividends, yep, they are all subject to income tax. Now, I'm not saying that this is everything. It isn't. There are many other things also subject to income tax, but these are the ones most likely to be of relevance to a student. Now, just to give you a tiny bit more detail, if you've just got a little sideline, you sell a few bits on eBay, that might be viewed as a trade. However, your first £1,000 of income is exempt from income tax. Likewise with rent. If you just have a little bit of space that you rent out, the first £1,000 of rent is exempt. With interest, assuming you're a basic rate taxpayer, which students almost certainly would be, then you can actually earn up to £1,000 of interest and pay no tax on it. And actually dividends, you can earn up to £2,000 before you start paying tax on dividends. So all of that probably means that the only bit of income that is likely to be subject to income tax is income from a job, a salary or a wage. Now, just in case you're thinking about other types of sources of funds you might be given some money, you might inherit money, you might win money on the lottery, you might win a bit of money gambling. All of those are exempt from income tax, so no need to worry about any of those. So what we're going to focus on is your wage from a job. But your issue is, it's not just income tax that you need to worry about. There's another tax knocking around called national insurance, which applies to some of these types of taxable income. The top two, to be precise. If you earn a wage, or you have profits from a sole trade, as well as paying income tax, you also suffer national insurance. So it's two different taxes on the same income. Now, in case you're thinking, well, hang on a minute, that's not fair. No, you may well be right, but that's tax for you. Tax isn't supposed to be fair. You might also think, well, it's not terribly logical, is it? No, tax isn't meant to be logical. It's just meant to collect money for the Treasury. So the why, all I always say with tax, never ask why, it just is. You've got two different taxes that you need to worry about. And the thing is, the two taxes apply in a very different way, which I will now try and explain. Income tax is all based around a tax year. The tax year runs from the 6th of April to the 5th of April, which I know is weird, it's just what it is. Now, everybody gets something called a personal allowance, which is an amount of money that you can earn tax-free, and in tax year 1920, which is when I'm doing this recording, the personal allowance is £12,500, which means that you can earn up to that amount in the tax year before you start paying any income tax. If you're looking at later tax years, the personal allowance is likely to have risen. National insurance works on a completely different basis. It is calculated for each pay period. So if you're paid weekly, you calculate it for each week on its own. If you're paid monthly, you calculate it for each month on its own. Now, I'm going to assume, just for ease, that you're paid weekly, so you can earn up to £166 a week without paying national insurance. Any earnings above £166 a week, you pay national insurance at 12%. And there's no idea with national insurance of then sort of having a look how much you've earned in the year. That simply is not relevant to national insurance. The other thing, just while I'm talking about it, people sometimes think, oh, national insurance, I'm not too worried about because, it's going into a fund for my pension. That's rubbish. It is just another tax that is being collected by the government and is being spent now. It isn't going into a fund for your pension. Sorry about that. So, what I'd like to finish with is just a little example for a random student. That photo just signifies a random student. So our random student is quite hard-working. They have a bar job that they do in term time, and they make £120 a week from that bar job, and they do that for 30 weeks of the year, which is sort of loosely university term time. Then during the summer, they spend 10 weeks doing a full-time job, and they get paid £280 a week for that full-time job. So, given that sort of scenario, let's have a look what tax will end up getting paid. Well, from an income tax point of view, remember you look ultimately at the earnings in a year. In the year, our student has earned £6,400, therefore they don't pay income tax. Now, it's worth saying that they might, in the short run, particularly for the holiday job, they might have tax taken off them, but at the end of the tax year, they'll have it given back. So there might be timing issues, but ultimately, they shouldn't end up suffering any income tax. National insurance, though, very different. The bar job, they're earning less than £166 each week, so they shouldn't have any national insurance taken off them. However, for this summer job, they've got 10 weeks where they're earning more than £166 a week, so they will suffer national insurance at 12% of the excess of their weekly earnings over 166, so they'll be paying £13.68 national insurance each week, which over 10 weeks, even I can work out, is very nearly £137. And that they will never get back. That is a tax that they will suffer. So hopefully now, with that understanding, if somebody does ask you, do students pay tax? You will now be able to give a far more informed answer.